Good morning. Welcome to the update on Monday, the 20th of June, on what we'll call Brexit week. Yes, this Thursday, the big UK vote whether to stay in the EU or leave the EU. Last week we could have called Central Bank Week, but all the major central banks speaking last week or making decisions simply kicked the can down the road on the basis that Brexit was sufficient uncertainty for them not to make any decision on that basis. So if we actually have a look at for the news this week, there it is all day on Thursday. I believe that the polling booth shut about 10 o'clock in the evening with first results through about midnight. However, unlike a general election, although the votes will be counted on a regional basis, the vote is purely on a national basis, so a lot more difficult to call the winning side sooner rather than later. News for today, well, there isn't any through Monday the 20th. The only other thing on the horizon is overnight we have the monetary policy meeting minutes from the Aussie. Interesting things ahead this week. We have Janet Yellen testifying twice, both on Tuesday and Wednesday, but in reality these events are going to be insignificant relative to the Brexit vote on Thursday. And what this is going to mean for the markets is there is a lack of liquidity in the markets. We were doing our COT analysis at the weekend, and the commercial entities who use the markets in order to conduct business or facilitate business rather than speculate, they had really substantially withdrawn risk from the market. They don't like the scenario of not knowing what's going to happen next, so they've removed the risk, wait for the result. We'll be doing likewise, and we have suggested to Phoenix Blue traders that there's no trading on FX this week at all. If you are trading, intradays are the way to trade, quick in and outs, because that spike at any moment could go against your analysis. Okay, over to the Far East in the Nikkei, we've seen an opening gap and a bullish day or a bullish session overnight. You'll see this reflected on worldwide indices. All the American indices have done similarly. The FTSE has, also the DAX in Germany, potentially on sentiment changing from the back end of last week to a higher probability in their minds of Britain staying within the EU. Over in China, not a lot to report. We're still very much in a tight range there. We know this market is controlled to a great extent by the Chinese government. Like everybody else, I'm sure they're sitting on the fence waiting to see what's going to happen. This is the yen, the US dollar JPY pair, the weekly chart here. Now the scenario here is watching out for bank intervention. The Bank of Japan have stated that if uncertainties in the market around the Brexit decision lead to extreme moves in the market, they will not hesitate to intervene. We take it to mean that they'll be looking for one of these two levels around here. That's the 100 level, or just above. I've got 1076, but pick your actual level. But that's where we'd expect to see intervention if we get a Brexit vote and a run from risk markets into safe havens. The yen will suffer, or it will suffer because it's not what it's looking for. It would much prefer to have a weakening yen from a local economy perspective. Over on the dollar index, we're currently testing around the 93.50 level that we were testing last week. Key level really for us this week is 92.50 on the downside or 95 on the upside. We might see one of those broken after the Brexit result, depending obviously which way it votes. Similarly on the euro, we've got two clear levels there. A vote to stay in should see a concerted rally by the euro. A vote to leave should see a big bearish move. We'll be looking to react to that once we've got a break of those levels in terms of a pullback to go long, or a pullback, a short movement pullback to take the trade short in the event. Over on the pound, all we're seeing is volatility. We can see even the week before last, we saw a spike down and a spike up. The spike up was a 2-minute spike, about 300, 400 pips over a 2-minute period. A market clearly to stay out of this week. Another chart I'm interested in is the Euro CHF, simply because this is effectively the risk on, risk off chart for the Brexit vote in Europe. With key level here for the Euro Swiss is down around here, which is about 1075, I believe. I've read that in the event of Brexit, expectation is pretty quickly this chart or this pair will be down at 105 down here, as acting as a safe haven as money pours out of the euro, out of the pound. Although the Swissy has been less of a safe haven over recent years, in the context of money that would stay in Europe, it is the safest haven. Again, we've seen over the last, over Friday and today, we've seen some sort of indication that the risk or the implied risk of Brexit has waned, because we've had a move above this second key level here. But based on the vote, we will be keeping our eye on that level there for a downside move if we do get Brexit. Over on the S&P, well, when we were talking about the Nikkei, we were talking about a bearish move through the day. We've already seen that there on the S&P as well. Again, potentially reflecting a swing slightly away from the bias of leave in terms of the Brexit. So we'll be watching this market. We've got two key levels we're really watching. The top of the market, circa 2118, or around the 240 zone down here for either a break, a trade short at 1R, roughly the all-time highs here, or a break retest to the downside, which will start what is potentially a considerable downside move. We might even see the levels that we saw back down here in February. So what will we trade this week? Well, the safe havens. The level on about 13.10 on gold here. We'd be looking for a break above that, retest on the long side. Our bias in this market has been long all year. If we get the Brexit vote, we'll undoubtedly see a break of that level. Whether we see it actually pull back and get the opportunity of taking a retest on that level, not able to say, but we'll certainly be looking for that or other entry opportunities on that basis. If you take a look at the silver chart, there's a similar key level at $18 round number, which would also be interesting for a potential break and retest in the event of a Brexit vote, or just simply in the event. Another market that we would consider trading this week outside of FX is crude oil. We've got a level here at 48.70, currently watching that level. We'll be looking for an intraday trade on that level, maybe on the hour chart, looking to watch price action at that basis. Alternatively, we'll be looking for a double top trade at around this 51.70 level, higher up there. Or if we're to see downside, a break of 46 as a key level, we'll be looking for a retest in there, looking to target 42.43, which is the next level here. So that is a market we would trade. You could see an opportunity to trade something similar to that on the US dollar NOK, which is the Norwegian US dollar pair, which is also very crude sensitive, as is CAD. What we are trading at the moment is we've been looking at commodities. We've got some seasonal biases. We've got some COT extreme signals. So we're short both corn and soybean on those two scenarios. We've got a signal, which means that the commercial traders are in an extreme position, and in that scenario we normally expect the market to move short in due course. In addition, both these markets have substantial seasonality to move down over the next month. these are markets that we have to trade in a very different way from FX. We can't use a very tight stop for the simple reason you'll see that prices currently ranging within our entry. We're in this market, but we're still above the stop there. We expect this type of movement on a commodity prior to the break to the downside. What the commercials are doing here is they're trying to absorb the long pressure so that they can move the price down quickly and easily back down to this level where they can start buying longs again at a lower price with a view to selling them on the way up again. Exactly the same on soybean. Now that COT analysis is something that we specialise in. If you don't know anything about this, please drop us a line. Have a look on the website or email us on phoenixblue.co.uk. It's one area that we use in what is called our pure analysis system, which you've been looking at today, where we see clean charts. We trade with a fundamental bias. We use a commitment of traders analysis, seasonal analysis. When we trade in FX, that allows us to trade very small stops. Obviously, as I've just said, that's not the case with commodities. But if you want to improve your results, if you're trading FX, if you want to have some more markets to trade in terms of commodities, so you can do what we're doing this week, trade other markets when the markets we would normally be trading, i.e. FX, are in a state where we don't want to take the risks, we can find equally high probability trades in other markets. With our objective that we're trading as professional traders, so we're always looking for high probability opportunities. We're not forcing trades in markets where they're not available. Okay, so any questions on that, info@phoenixblue.co.uk is the email address. If you've got any specific questions for me, I'm on tom@phoenixblue.co.uk. Trade extremely careful. It's going to be a fascinating week. We will be watching the charts constantly and analysing the charts even when we're not trading them, just to try and understand what's happening with the Brexit votes. Okay, that's it for today. We'll look forward to speaking to you again in the morning. Take care.